Hello friends, I'm Nataraj Upadhyay. Welcome to the third edition of this seminar series called Fundamental and Technical Analysis for ETFs. So this is the part 3. In the last part, we discussed about the world of mutual funds and exchange traded funds or ETFs. The purpose of this seminar series is fundamental and technical analysis. There are two ways to participate in the investment and trading activity. One is active, second one is passive. As a newcomer, it is important that we manage the risks better because there is more to what we don't know than what we know. So it is better to be a passive investor through mutual funds, as mutual funds are managed by more experienced money managers. Therefore, in the session 2, we covered the topic of mutual funds. Now, in this session, we are going to understand the weekly analysis I do on mutual funds based on the data that is available from Value Research for download. This demo, I hope, will help you to understand how mutual fund data can be very useful to get better grip on fundamental analysis, and even though it is a passion, it is a passive way of an investment. Also, by doing this on a weekly basis, we can sense the change that comes in the market through the view of mutual funds, and that gives you a sense of a dynamic uh, grip on the market you are participating, though you are participating passively. So slowly you would get an appreciation as to the need to understand technical analysis as we go. In future, we will get into the more more details of fundamental technical analysis from the perspective of an active investor. But we are going a bit slow, mainly to encourage you to gain confidence and learn things step by step. So still, therefore, we are now dealing with the passive investment. This weekly report, I am doing it primarily for the purpose of my usage because I am also a new investor, though I have been in the stock markets for last 30 years. I have been doing it a bit systematically and with more focus and full time only since July 2023. So I am less than 1 year old in this market, and therefore I am having a very aggressive agenda in terms of learning as well as making progress towards maturity to make good money from the Indian market, which has huge opportunity, not only in the last 3-4 years, but also probably the next 5 to 10 years, as India is in the threshold of a breakthrough with respect to its economic growth. Therefore, mutual funds investment is important for all concerned. Therefore, though I am an active investor, I'm also putting my gains from the market into mutual funds, both from a risk management perspective and also to balance my portfolio in terms of my investment strategy. So we are going to go to the weekly report. So I am using the last week report as a sample to go through. So this weekly report is available at a blogger site called Nats Corner. So this is the address you can note down. natsfurcorner.blogspot.com will take you to the most recent weekly report. You can also access all the past week's report also. These reports I have been generating since January 2024, and there is a level of improvement as to the purpose, the analysis from these reports. So let us go to this report now. So I have to reshare this site for you. I hope you can see this report now. This is the report as on April 13, which is the last weekend. You will see similar reports for every week before. Now, typically, the first screenshot, what you see here, is the top 50 funds that are pertaining to all fund types. And this data is coming from Value Research. Let me expand this blog so that we can see slightly better. Okay. Now, if you look at this blog, after the first picture, there will be commentary. So let's read the first paragraph here. So I am reporting that there is a divergence from last week report, which is April 6. When we look at top 50 across all fund types based on 1 month return. Though the top 50 is dominated by commodity funds based on the investment criteria, which is to look for above average returns in timelines 1 month through 1 year within top 50, no commodity funds make the criteria for fresh investment. This is because of two reasons. A, top returning commodity funds have given below average 1 month return this time. And B, the superior return of foreign equity based funds, which have popped up in the top 50, have elevated the average returns for some commodity funds to miss the criteria. So let me explain this bit more in detail. For this, I am going to go into this report. So I am double clicking on this picture so that you can see it better. Just one sec. Okay, now I have focused into the 1 month return top 50 table here. This I am going to explain a bit more in detail as to how to look at this table. So you can see that this data is coming from Value Research. This is generated on 13th April. Typically, I generate it on a Saturday morning so that all the performances of the mutual funds through Friday is reported to Value Research, and through some batch process, its database gets updated. So I take the download from Value Research and then I process further in Excel sheets and get this kind of report. Let us look at the details of this report. Top 50 based on 1 month return, and this data comes from approximately 1,565 funds of all types. The all types meaning equity, hybrid, commodity, and debt funds. So here is the fund names, and here I am highlighting 1 week return, 1 month return, 3 months return, 6 months return, and 1 year return. From a Value Research perspective, they provide data either from a short-term perspective, which varies from 1 week to 1 year, or on a long-term perspective, which is 2 years and beyond. As we always say that the future performance of mutual funds cannot be predicted based on the past performance. Therefore, it is important for us to have a grip on how the mutual funds performances are changing. And it is useful to have a look at that change on a weekly basis. So that is the purpose of this weekly report. So though we are reporting on a weekly basis, we are giving more weightage as to the performance of the mutual funds for the last 1 month. And please understand that since we are generating this report on a weekly basis, within a month, we get 4 times look at how the weekly return is, how the monthly return is changing, and how we get a summary from a top 50 funds based on 1 month return. So if you are making fresh investments based on the current trends of mutual fund returns, you get 4 times chances in a month to look at the top funds and appreciate the dynamics of how funds come in and go out of this top 50, and therefore make your fresh investment decisions. So basically, I'm saying that this report is more useful for you to pick up funds for fresh investments. I understand that in the background, you do have your own approach with respect to SIP investments, systematic investment plans that is going on in the background. You may have your own hold and sell strategies of mutual funds. So I'm emphasizing here is that this is more useful for fresh investment decisions. Why? Because this report gives you a best grip as to how the mutual funds performances are changing and which are the top performers based on last 1 month returns. Therefore, you can see that top 50 funds are listed here by sorting them at the descending order of 1 month return. Okay. Now, though we are looking at 1 month return to select top 50, it's important that we do not get caught up with the one-time flash in the pan kind of performances. Therefore, it's important that the monthly leaders here are also recognized with the consistent performance in other timelines beyond 1 month, which is 3 months, 6 months, and 1 year. So for that, what I do here is at the bottom of the report, one sec. At the bottom of the report, if you can see, I include the averages. So let's go through these averages first. Top 50 average based on 1 month return. Let me go through for this report. Last 1 week, this top 50 returned with 5.49%, which is very impressive for a 1 week return. Average return of the top 50 in the last 1 month is 12.9%. In the last 3 months, it's 7.69%. In the last 6 months, it's 24.45%. Though it is for last 1 year, it is 19.1%. You can notice that this 1 year return average is much less than 6 years. That is because currently the market is going through some correction of equity funds. Typically, the equity funds appear on the top 50 when the market is in the bull phase. Now it is in a correction phase. The most of the funds that appear here are commodity funds. Commodity funds typically give a return at par with either debt funds, which is 7 to 8%, or in the best times, it can go up to 20%, which is what is happening nowadays. That's why you By looking at it, you get a sense of what's happening in the market. That is the purpose of this analysis. So now, to contrast this 1 month return against 1 year return, the next set of averages will be helpful. Top 50 average based on 1 year return. If you notice, it is less 0.54 because these are all mostly equity funds and they're not doing that great. 1 month return is 5%. That means though there is a correction, some of the equity mutual funds have started pulling up, which is a good news. And last 3 months return is around 13.91. And last 6 months is around 36.25. And last 1 year is 77.93. So the message here is, though there is a correction phase, the top 50 funds based on last 1 year return are still showing a superior return, which is close to 78%. So that should give you more confidence as to the power of mutual funds in terms of engaging them on a long-term investments. Okay. However, the purpose of our investment decisioning is to ensure consistent performance across all times from 1 month to 1 year. Therefore, based on these averages, based on this monthly average, I highlight those funds with better returns than the average. For example, 1 month average return is 12.90. So I highlight all the returns above that 12.90. Similarly, for 3 months, it is 17.69. So all the 3 months returns higher than that are highlighted. Similarly, for 6 months and 1 year. So having done that, now what I do is, let me expand it further for better readability. Only those funds which have shown better than average return in all timelines between 1 month to 1 year are marked as green. So the message here is, if you are looking at the top 50 for further investments or as a fresh investment, it is important that you pick up a fund which has a consistent return which is above the average of top 50. In this report, there are only 2 such funds that have made the cut. One is Mirae Asset S&P 500 top 50 ETF fund of fund. If you look at it, this is actually regarding the stocks that belong to the US market, S&P 500. As you are aware, you can invest in foreign equities also using Indian mutual funds. So if you look at the returns here, they are quite decent. Another one is Mirae Asset Nice PAN plus ETF fund of fund. That also has made the cut. So the message here is, other than these two, foreign equity based funds, nothing else has made the cut. That means when you're looking at fresh investments, neither the India equity based funds or the commodity funds, because most of these are commodity funds, have not made the cut, which means the commodity funds are also going through some kind of a turmoil or a churn, which got further confirmed through this week actually. And also, it may be a good pause. It may be a good time to take a pause on fresh investments on Indian equities because they're still going through correction. Therefore, you may want to wait until that correction gets over. And how do you know that correction gets over? When the correction gets over, those equity funds will start appearing in the top 50 based on 1 month return. So this is how you understand this report and make your judgment call as to new investments you need to make in the market. it may be possible that you may want to sell some funds you have invested, or uh, or you may want to continue systematic investment plan with certain funds you have already decided to. Those two decisions are outside the purview of this analysis. So that is a disclaimer you need to note down. So if you look at this report, most of them are commodity funds, and they did not make the cut, because though they, for a fresh investment, because though they have superior 1 month return, they are not making a cut with respect to having an average, above average return on other timelines like 3 months, 6 months, and 1 year. So this is how you use this report. Now let us go to the second point of the commentary. Before that, there is one more statement here. We can anticipate further divergence in fund behavior through next 3 to 4 weeks due to national and global dynamics across the quarterly results. So this judgment call I am making based on my own understanding of this analysis since last 3-4 weeks, including this week. So as you can see that there is a lot of churnout that is going on, both in the national market as well as in international market. Therefore, the next week's fund analysis report could be very interesting because it's very difficult to predict. We would potentially see a different behavior than what we have seen this week. So please wait for the next week's report that should come by Saturday, 20th of April, very soon, which is tomorrow. So let's go to the next point, which is already stated. Based on 1 month top 50, the following made the cut with the above average returns for all timelines from 1 month to 1 year, which we already discussed. As you can notice here, I am not considering the 1 week return as a basis because it is too short a time and it may be more misleading. Now, it is useful to contrast this top 50 based on 1 month against top 50 based on 1 year. So by doing that, we get a better grip as to how the mutual funds are behaving between short term, which is within last 1 month, versus last 1 year. So that from a investment criteria, we don't look at only 1 month based returns. We also look at 1 year return based criteria also. So that is this second picture. Here you can see that top 50 based on 1 year return across all fund types. And here again, the summary is given at the bottom. The average. So let us look at the averages. So here top 50 based on 1 year return, which I have already discussed, right? So based on these values, whichever funds have higher values for that timeline above the average, for example, top 50 average for 1 year is 5.09. So this month, whichever return more than that return are highlighted in bold. Similarly, all the funds which have above average return for timelines 1 month through 1 year are marked green. So let us look at which are those funds. So let me zoom it again. Okay. So let us look at the first fund, CPSE ETF, which is an actually exchange traded fund. For some reason, it is clubbed as a mutual fund. Actually, if you have to invest in this CPSE ETF, you need to buy it like a stock actually. this is the top performing fund in the last 1 year. If you look at it, its 1 year return, even after correction, is 105%, which is very impressive. 6 months basis 57.05. Everything is good except for the last 1 month, it is underperforming. Okay. So if you want to invest in this CPSE ETF as a fresh investment, probably you can wait for some more time until this 1 month return percentage also comes back to above average is the message here. Okay. Now let us look at all the green ones which have given better than average returns within top 50 of 1 year returns. So Mirae Asset Nice Bank Plus ETF, it is appearing based on 1 year return also, which is 101.95. SBI PSU fund, which is also close to 100%. And this month, it has given a decent 5.22%. So maybe it is okay to consider this as a fresh investment, though there are some correction risks still pending. Next one is Quant Infrastructure Fund, Quant Value Fund, Bandhan Infrastructure Fund. So the message here is that though there is so much churn out, looking at the top 50 based on 1 year returns, these 5 funds can be a good consideration for fresh investment. It is not my intention at any time to tell you which one to invest, because legally I am not qualified to tell you that in public, nor that's not my intention. I am just sharing my analysis with you, and this analysis is the basis for my fresh investment. So I am actually comfortable to make investments into these 5. However, I need to tell you that I did not make any investment this week because intuitively I felt that there could be further correction through this week, and that's what has happened actually. So I feel good that I waited for 1 more week, though I made some fresh investments based on the last week's report. So that is the second table. So let us now go further. I have started writing my analysis commentary just below the picture, so it becomes easier for you to use the picture and the commentary together. We discussed all this already based on 1 year return. Now we are going for looking at top 50 based on equity only. This is to see whether there is a divergence between top 50 based on all fund types and equity only. So let us get into this more in detail. Again, I'm zooming it for better readability here. Okay, here equity top 50. Again, the averages are given in the bottom. Sorry. Okay, averages are given in the bottom. So based on the average, those who make the cut by having above average return in all timelines between 1 month to 1 year are Mirae Asset, Nice Bank Plus ETF FOF, SBI PSU Fund, Quant Infrastructure Fund, Quant Value Fund, Bandhan Infrastructure Fund. Now, what you see here is same thing what we saw based on 1 year return. So this is furthermore reconfirming, because there is no much divergence between what we understood before and looking at equity top 50 only, we have not seen any new surprise message here. So that is more convincing that way as a safer investment bet. So let's move on. So that's what I am discussing here. Let's read that commentary. When you look at equity only top 50 based 1 month return, the following made the cut, which we discussed. Bandhan Infrastructure Fund misses out in top 50 across all fund types due to lower 1 month return than top 50 average, though the 1 month return is healthy 8.65%. Okay. So what we are seeing is Bandhan Infrastructure Fund appeared in the equity only list, though it did not come up in the one-year based return across all fund types. So this kind of divergence tells you something specifically. Because it has missed out, though it is 8.65%, it is below the 1 month return average. So if you like Bandhan Infrastructure Fund, though it did not make the cut in the top 50 based on 1 year return, because it is appearing on the top 50 within the equity only funds with a decent 8.65%, it's okay to consider this Bandhan Infrastructure Fund for fresh investments is the message. Let us move on to next one. We are repeating the same for equity only based on 1 year return. So here again, the ones that have made the cut are what we have seen before in the 1 month basis. It's the same set of funds, which is again reflected in the commentary. The funds that made the investment worthiness in equity only top 50 based on 1 year return are the same as those in top 50 across all fund types, because when it comes to superior 1 year return, equity rules almost all top 50 positions. See, what happens is when you look at top 50 of 1 year, whether it is all fund types or equity, typically the report will be similar, because historically the top 50 has been put typically all equity only. That's why we see that. This need not be the behavior all the time. So these distinctions gets you better grip on the market pulse and improves your investment decisions, though it is a passive investment using mutual funds. Therefore, please use this analysis for your benefit, because this is a work done for my benefit. I'm sharing with you. Let's now move to next picture, which is hybrid top 50 based on 1 month return. See, hybrid funds become important when equity funds start correcting and they are in a bearish phase, because hybrid funds mix equity and other asset classes like debt and commodity. So there is a good chance that they can perform better than equity funds through the correction stage. However, in this correction, we have seen that hybrid funds did not give better returns than equity funds on the top 50 basis, simply because their equity portion also went through similar correction stage. That need not be the behavior in all corrections. It is possible that certain times hybrid funds can give better returns than equity funds. So this report always looks for such situations. So let's get into the detail here. So since hybrid funds are giving good returns, though it is bit less than equity funds, I am giving more importance to hybrid funds here. So if you look at the top hybrid fund, this month with the monthly return is HSBC Multi-Asset Allocation Fund. But it's a new fund. That's why it doesn't have track record for 3 months, 6 months, and 1 year. Therefore, I have not considered it as for an investment decision. So the next ones which have come with the above average returns for all timelines. So if you look at the first one, Quant Multi-Asset Fund has given 51.17% in the last 1 year, which is definitely much less than the equity fund average of top 50, which is 78%. Still, it is a decent return. Therefore, anticipating further volatility and correction of equity funds, you want to de-risk your mutual fund investment by investing in certain hybrid funds. The funds that are marked as a green are good considerations for your fresh investments. Let us look at what those are as on this week. Quant Multi-Asset Fund, Quant Dynamic Asset Allocation Fund, Bank of India Mid and Small Cap Equity and Debt Fund, Axis Retirement Savings Fund Dynamic Plan, Axis Retirement Savings Fund Aggressive Plan, ICICI Prudential Retirement Fund Hybrid Aggressive Plan, ICICI Prudential Multi-Asset Fund Direct Plan, Kotak Multi-Asset Allocation Fund Direct Plan. Do not look at only this green color, also look at those returns and make a convincing case for yourself based on your investment strategy. You can see that 1 month returns here are much lesser than the top 50 equity based on 1 month return, but there's just still quite decent. So if you are into hybrid funds, this report is very useful for you. Since the investment into hybrid fund is similar to equity fund, I tend to do this analysis for hybrid fund for based on 1 month return also, 1 year return also. So who are the top 50 based on 1 year return? That is this table. So here the funds are slightly different. GEM Aggressive Hybrid Fund is the leader based on 1 year return because it has given 52.83%. Okay, and here there are some more, most of them are similar to what we saw based on 1 month, and some are different here. For example, ICICI Prudential Child Care Fund has come in. So based on whether you look at 1 month only or 1 year only leaders or both, you can use between these two tables and take your call on fresh investments. So that is what is discussed here. So now we are going into commodities funds. This is just to get an appreciation as to what is happening on different fund types. Okay, so commodities are doing well nowadays. So it is important to have a grip on how the commodity funds are behaving. So as I said before, one should consider commodity funds more as a replacement for your fixed deposit. They will not give you returns at par with equity funds in India context, though in short term they are giving superior returns than equity funds because equities are in correction phase. For example, the average is above 13.05 for this month, which is again given at the bottom of this table. You can see later. So here, however, you don't see any green rows here because no fund has given above average return in all fund on all timelines from 1 month to 1 year. So what it indicates that there is some kind of volatility or churn out as to the performance of these ETFs. You can consider them, but for short term, but there could be some corrections coming in commodity funds on the longer term period here is the message here. Within the commodities universe alone, they could not make a cut by ensuring top above average performance is a question mark as to maybe there is something more churn out coming into the commodity funds. And that's what has actually happened this week. So there is some confusion here. So best thing is to stay with your investment so far, but postpone your fresh investments because no clarity has emerged through this report is the message. So to that effect, you will see some comment here. So the comment here is when we look at commodity only top 50 funds based on 1 month return, none make the cut on investment criteria. This is because there is a churn out of leaders across shorter term and medium term within 1 year, and effectively no fund makes cut with above average return across all timelines from 1 month to 1 year. We need to take a pause, therefore, and wait for better pattern emergence through upcoming weeks. So the next one is debt top 50 based on 1 month return. This is just for a completion criteria. According to me, the debt funds have not become attractive enough because debt funds will start becoming attractive only when the interest rates start going down, and that may not happen for another 6 months or so. So this is just for completion of the reporting, mainly to ensure that there is no anomaly to notice. So if you look at these debt funds, annual returns are at par or bit less than fixed deposits. See, fixed deposits, one can go for easily 8 to 9% nowadays. And therefore, I find these debt funds are not really attractive, though they may be a consideration for more strategic investments by high net worth individuals and institutions. So they do have relevance, but as a middle class investor, you can skip it for now until you will see returns above 10% and fixed deposit interest rates start going down. So, but I need to validate that every week, so it will be there. So one more is there. Okay, so that is the end of this report. Now, what I'm not covering in detail here is that by going through this report on a weekly basis, you get contrast between the report this week and previous week and further previous weeks. So by looking at it, you get a better grip on what is happening in the market, what's happening to specific funds of your interest, what is the behavior of top 50 funds based on all fund classes and specific fund classes. So you get a better grip on fundamental and technical behavior of the market. Therefore, this report is very applicable even for a passive investor with mutual funds. It is very useful to get you the inspirations to learn many other things as we go. And though I am very much interested as an active investor and trader, I do make investments in mutual funds, which is important because by ensuring successive investments in mutual funds, we should be able to get at least a level of return. You can see here, if you notice in this table, see, basically now I am discussing the benchmark of mutual fund returns. Entire mutual fund universe average, which is if I take an average of all the 1,565 funds, they have given a return of 28% in the last 1 year. That means if I do mutual funds investment based on top mutual funds behavior, my annual return should be more than this. So it will be somewhere in between 28% and 78% for the current market dynamics. So if you take the average of these two, 78 plus 28 is 106 divided by 2, 53%. Therefore, I would say that we should aim for Indian realities an annual return of 50% at least for our mutual fund portfolio, especially from the equity. Okay. Now, since our mutual fund will be investments will be a mix of equity plus hybrid plus commodity for now, and eventually some debt later. we should achieve at least more than 30%. So that is the message here. And I personally hope to come close to that 50% by tuning my fresh investments as we go. So I hope you will also benefit from these reports and become a better investor and trader, not only in mutual funds, otherwise also. There is one thing I did not cover in the last mutual funds based talk, which is to look at the mutual fund investment details. If you go to Money Control or Value Research or the specific website of mutual funds and look into the top 10 investments of these well-performing mutual funds, you get an idea of how the professional money managers are directing funds on what kind of stocks. So by looking at the top 10 stocks of top performing funds, you can get a better insight of a fundamental analysis indirectly. So that is something you can do, which I can probably demonstrate by using a particular fund. So let me share a screen here. So and do it. So let us say let us go to Money Control. Okay. So let us say we are interested in investing on, let's say, Quant Infrastructure Fund. So I am typing that fund. So it has appeared here. So Quant Infrastructure Fund, I am selecting. It's taking some time. Okay, it's appearing now. So let us look at this Quant Infrastructure Fund. What is the current NAV? And what is the expense ratio? 0.73. Okay. Rank sometime is given. Since it's a equity based fund, it's always risk is high, right? Corrections. So let us now look at its behavior. This is actually as on April 19. So this week it has corrected a bit. Still, last 1 month it's 8.97% return. Last 3 months 20.24%. Last 6 months 50.92%. And last 1 year 80.40%. So it's comparable to the last week's report. Okay. So if you come down here, you get further investment here, how it has performed beyond 1 year. 2 years basis 34.56%, 3 year basis 42.02%, 5 year basis 36.55%, 10 year basis 24.17%, and since inception 20.41%. So if you have invested 10 years back also, you would have made good money. So that is the India development story. That becomes further clear by getting into the fund details. So here I have come here to highlight how a mutual fund data is useful for better clarity of fundamental analysis, even for your active trading or investment. So this fund, if you can look at it, it has invested 9.74% of its holdings are in Reliance Industries, 6.52% in Adani Power, 6.05% are Jio Financial Services, 4.76% Kalyani Steel, 4.69% in IRB Infrastructure, 4.5% in LIC, 3.9% in Steel Authority of India, 3.22% in Swan Energy, 2.98% Bharat Electronics, 2.96% Tata Power. So typically, because these top funds are behaving or performing better, this fund can come in the top 50 based on 1 month return. So there is a correlation here. So you can use this data for your personal investment as part of your long-term investment as an active investor. So you can see further detailed portfolio analysis of this fund. So you can get into more details. Just because we ran out of time last time, we didn't do this. So I'm covering it this time. So it says that this fund has 39 stocks. Okay. Top 5 stock weightage, top 10 stock weightage, top 3 sector weightage, so various details like average MCAP, all that is available. We can also see the complete holdings, not just the top 10. It will give you the complete holdings here and how these holdings have performed across different timelines. So by looking at it, you can get certain tips as to which stocks you may consider for your own investment criteria outside the mutual funds. So that is the relevance of mutual funds from a fundamental analysis as an active investor also. So that is the point I missed to communicate last time. That's why I have covered it this time. So this brings us to the end of the this presentation. So again, before ending, I wanted to give you some details here. So basically, I'm going to the last page. I have included the weekly blog link also here. You can also look at my weekly mutual funds analysis in all these forums, whether it is Facebook. It's also there in my Instagram, which is not listed here. You can also look at Twitter and LinkedIn, my profiles. I will have this report. So you cannot miss my weekly report. I hope you are convinced to have 5 to 10 minutes time spent on my weekly mutual fund analysis report going forward. If you have any questions or clarifications or feedback, please contact me. I have given my phone number and email here. Thank you very much. This brings to the end of this talk. Thank you. Have a good one.